This webcast is designed to give you some basic background information on IRS guidelines for reasonable compensation of S Corporation shareholders. By knowing the fundamentals, you will be better prepared to communicate with your clients, answer their questions, and shepherd them through what has been an imprecise process of setting reasonable compensation. If you're interested in doing some independent research on this subject, the May 2012 publication of the Journal of Accountancy has an excellent article on this subject. Let's face it, incentives exist for S corporations to pay minimal wages to employee shareholders. That's because wages are subject to FICA and FUTA employment taxes, while ordinary income that passes through to S corporation shareholders is not subject to either individual or corporate employment taxes. Disagreements over the reasonableness of wages are litigated frequently in court, and quite a few decisions have held in favor of the IRS. And when this happens, the S corporation and employee are subject to employment taxes as well as a whole host of penalties, including interest on tax underpayments. Let's define some terms here. Section 3121 a defines wages as all remuneration for employment. For federal employment tax purposes, Section 3121 d defines an employee in part as any officer of a corporation. However, there is an exception to employee status for an officer who performs no or only minor services. For compensation to be deductible, it must be reasonable for the services actually rendered. The code specifically empowers the IRS to reallocate an S corporation's income in family income splitting situations. Section 1366 e provides that a member of an S corporation shareholder's family must receive reasonable compensation for services rendered or capital furnished to the corporation. This provision applies to family members whether or not they own shares in the corporation. Under these rules, the IRS can adjust income to reflect compensation it deems reasonable for services rendered or capital furnished to the corporation. Inadequate salary, rent, or interest could result in reallocations by the IRS. Unfortunately, there is no rigid set of rules for measuring the reasonableness of compensation, which means that each situation must be evaluated based on the unique facts and circumstances attending it. Factors such as the character and financial condition of the corporation, the role the shareholder employee plays in the corporation, including position, hours worked, and duties, the corporation's compensation policy for all employees, and the shareholder's salary history, including the internal consistency in establishing the shareholder's salary, how the compensation compares with similarly situated employees of other companies, conflicts of interest in setting compensation levels, and where a hypothetical independent investor would conclude that there is an adequate return on investment after considering the shareholder's compensation. But that's not all. Additional factors like the employee's qualifications, the size and complexity of the business, a comparison of salaries paid to sales and net income, general economic conditions, salaries versus distributions and retained earnings, the corporation's dividend history, whether employee and employer dealt at arm's length, corporate intent, and whether the employee guaranteed the employer's debt. Like I said, no single factor rules the day, but rather an amalgamation of these factors must be considered. Furthermore, these factors are not all-inclusive and may not be weighted equally. Just like the old adage that says an ounce of prevention is worth more than a pound of cure, the best assurance that wages paid will be deemed reasonable is to anticipate and prepare in advance for an IRS inquiry or audit. While wages should be set to accomplish your client's desired results, such as splitting income among family members by paying higher wages or minimizing wages to an employee shareholder to reduce payroll taxes as examples, the amount should consider the factors covered in this video, and you, as their tax professional, should decide how to counter a potential IRS argument. The comprehensive document furnished by reasonablecompensation.com can assist with initiating these conversations. What's more, the documentation as to why the compensation is reasonable may be submitted into record in the corporate minutes.